Eric Muathe, Muathe.com. Let's take a look at a stock here that is up about 7 to 8% early on here in the trading session, today being December 13th, 2016. The stock was up as much as 25 to 30% at the open. Seems to be giving back most of its gains. So how would you trade this? Well, a couple of considerations. And by the way, keep in mind, this is a stock that was trading here at 50 cents in the middle of November, a couple of days ago, and now has moved as high as $3. So you could argue it is a little bit on the extended side. But how would you approach this? So what I would do here is, let's take a look. In fact, let's take a look at this from let's go to a 6 months daily, maybe even 3 months daily. So 3 months daily is what we have in front of us, and what I want to show here is there's this daily closing high recently, and that was at 2.42. Now this becomes the buy point from a breakout perspective. If the stock can hold above 2.42, this is a good excuse to own the stock. In other words, you'd be playing the daily breakout as long as the stock is holding above 2.42. Nothing wrong with that. Yes, it is coming off the highs, which is a negative. You want stocks that hold on to gains, but the key on how to play this from a short-term swing trade perspective is as long as the stock can hold above 2.42, then you can own this. Now if the stock does drop below 2.42, then you can get out of that position. Now also, if you want to play this short term, you have to insist that the daily RSI continues trading above 69.1. That would guarantee momentum to the upside as long as the stock is above 2.42. And also, just what you're looking for here is a good breakout, staying above the previous daily closing high, like this breakout here. Once it moved above this daily closing high, it never looked back and had a good price movement. So you want to break out above 2.42 and the stock doesn't look back. If it drifts back below that level, you want to get out. Also, on the weekly, if the stock is going to do well over the next couple of weeks, if it is going to do well, it needs to hold above 69.1 on the weekly RSI. Failure to stay above 69.1 would suggest that it has run out of momentum. Now I want to show you why I personally lean to the idea that the stock stalls around here. Let me show you why I think the stock is going to struggle. Of course, I don't know. I guess nobody knows, but I think it's coming back to test this low here on a weekly time frame. And as of right now, we've seen that it has hit this level intraday twice. Well, let's draw it somewhere around there. It's failed on a couple of occasions is what I'm trying to say. And I think this becomes a problem. As you can see, came close here, failed to move above it or stay above it, and even here. So I think this becomes a problem. Keep in mind, this was a major break. It's what that brought the stock to a major funk. Broke below here, stayed down here, now trying to recapture back above where it broke down, and seems to be a problem. Now that's the weekly chart. That's why I think around here, this is, in my opinion, if it cannot hold above 2.42 on the daily, if it fails and moves back below this level, I would get out, because this resistance here is going to become a problem as we go forward. There is also another view. If you take a look at the long-term monthly charts, go back to the lows here of early 2014. That was the monthly closing low, and then there was another monthly closing low here. Let's just draw a line somewhere around there to capture those two closes, and you can see here what is going on from a long-term perspective. We broke down here, stayed below there for many months, and now we are trying to recapture back above that level. We seem to be unable to hold above that level. I think that's a negative. Also, take a look at where the RSI broke down. So there's this breakdown line here on the monthly RSI that is definitely going to be a challenging area. If the RSI cannot move above that line, remember this was the break. This break in the RSI brought the stock off the highs there. There's also another way of looking at this, which is to take a look at where it recently broke down. So it broke down here, that break brought the stock during this drop here. This was a major drop. And now, if you take that level there and draw a line from there, you can see by the time we get to the end of this month, this might also be confirmed as resistance. And once we confirm this as resistance in the coming month or months, chances are, in my opinion, the stock eventually rolls over. So the key to whether one can hold this or not is to go back to that daily chart. And if you want to own this, you have to insist that the stock can stay above its current breakout level of 2.42. That's how one can play this. You can own it as long as the stock is above 2.42. Otherwise, failure to hold above that level, as we've discussed here, might suggest that now it has lost momentum and chances of dropping are very high. Also, on the daily, we want to insist that the RSI is above 69.1 and that on the weekly, RSI can stay above 69.1 as reasons to continue holding. Otherwise, failure for all of this not to play out, including a failed breakout, would suggest you want to get out of that swing trade. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. Woo! I am out. Mwah.